Welcome to Pressure Points. Our topic is Google earnings. And as of this recording, which is shortly after the earnings call wrapped up, shares were up 4.5% in the after hours. That compares to up about 3.5% just at the beginning of the earnings call. So we saw kind of a slow movement higher throughout the call. There wasn't one event in particular that moved the stock higher during the call. It wasn't like the guidance came out and it bumped up a little bit. So in general, the investors kind of got a continued, I think, felt better about what had happened. I believe that the stock is up that 4.5%, less about the actual results themselves. I think it was more just they weren't as bad as what I think some investors were expecting. And so I'll jump right into the pressure point. That, of course, is what's going to happen with search. This has been kind of a looming topic around the Google story for the last year and a half. But usually, like the Google Cloud number is something that investors get more focused on. But just as evidence that the pressure point is in fact search, was that cloud growth actually missed estimates. It was expected to grow at 29% year over year. It was up 28%. And yet the stock is up 4.5% here. And I think that that is an indication, again, that there's more focus on search. Search came in line with expectations for 10% growth. And just to put that in the context, in March of 2024, so this would be the fifth quarter since then, the growth has gone from 14.5% year over year down kind of to 13, 12, 12 to 10. So we've seen this kind of continued drift down in search growth. Now, they've been kind of stoking the top of the funnel with AI overviews, and they said that that now reaches more than 1.5 billion people monthly. That compares to, they said, over 2 billion daily active daily users of search. And so that these numbers kind of loosely say that, call it about half of Google users are currently getting exposed to AI overviews. And as I mentioned, they're kind of keeping the momentum going around search, that 10%, by keeping those AI overviews at the top. People start to view this as I can get my answer more quickly by going to Google. And if I want to actually click on a link, I've got that option too. They kind of get the best of both worlds. The challenge with the best of both worlds is that you are not an expert in anything. And my sense is that the world is going to be increasingly shifting to wanting a more simplified results page, something similar to what we see with Grok or GPT or Anthropic, kind of the chat bot kind of model. And this, of course, is a well-traveled road, this pressure point. That's why this is a great company and trades at 16 times earnings. The rest of FANG, if you exclude rest of the Mag 7, if you exclude Tesla from there, trades at a mid-20s multiple. And so this is a pretty deep discount to what some of the other leading tech companies are trading at because of this question. But as I think more about that, like what did we learn today that gives us some view in terms of what's going to happen with Google search over the long haul? And one little nugget that we got was at the beginning of the call when they said that the monetization that they're seeing with AI overviews continues to remain consistent. And so you could view that as a positive, that it's not diminishing. You could view it as a negative, that even though they're rolling it out to more geographies and have much more users with overviews, that they're not seeing an improvement there. And ultimately, I view it more as a negative than a positive, because I think you do need to start to see some improvement to get more excited that the revenue growth is ultimately going to start to pick back up again. And so that was one little nugget that we learned on the call. A second nugget, this is all related to search. What didn't come from the call, but just kind of what's going on in generative search overall. They talked about that 1.5 billion monthly users. They've been rolling it out, as I mentioned, to other geographies. So it's hard to get like an apples to apples comparison of what that number really means. But we do hear from what's going on with GPT, and they in February hit 400 million users. And based on some recent comments from Sam Altman, they're probably on path to get to 800 million. These are weekly users by the end of June. So just this vertical growth. It's that growth rates is accelerating off of higher numbers. And I think that if Google was experiencing that kind of growth, they would have given us more details on this call to get investors comfortable that they're actually kind of tapping into the more simplified generative results page. So in the end, the search business it's stable today. That's a good news. That's why the stock is up. But yet there was really nothing on this call that, as a long-term investor, you could point to say that they're out of the woods. And the woods, most specifically, is what happens to Google's search results page. Today, it's basically three pieces put together. You have the AI overviews, and then blue links, and then below that, the organic links. And so this kind of mix, I think, ultimately needs to go to a more unified kind of search page, search results page. And so that's the central question. That's the pressure point. We didn't get that answer today. I do want to quote Doug from Deepwater as we were discussing this going in. I think he had a great analogy. He did have a great analogy in terms of what this all means, is that the sense is that this is moving more towards Google to being more like eBay. And at the time when eBay kind of was the first to commerce, but then you had this Amazon, they had a different model. The different model was they're fulfilling things, or eBay was fulfilled by the seller. And that ultimately was a fork in the road. In the case of Google, that fork in the road is, what do they do with the search results page? How do you kind of navigate the 10 blue links with a more simplified result? So that's the pressure point. I'm just going to quickly hit a few other important points. Is the Capex number. They reiterated the 75 billion number. The streets actually dropped their estimates over the past few weeks down to 72, kind of anticipation at that number. So they're reiterating that. That's up 40% year over year. That's a positive sign for the broader AI kind of build out. Good sign for NVIDIA and other companies, Vertiv and other companies that are building out the AI hardware infrastructure. And then last, a couple more in terms of YouTube, seeing kind of a similar results to what we have experienced with search. Is the growth rates were higher a year ago, call it 13% in June, and they've kind of drifted down to 11% more recently. So kind of that, it's off of bigger numbers, so it's understandable that the growth rates would slip a little bit, but that's kind of just the general view on YouTube. Last point is in the toy department, which is probably the most exciting thing going on at Google right now, which is related to Waymo. Thank you, Mark Mahaney, for asking this question at the very end of the call, and asked, what is your go-to-market strategy? And they said the first thing they want to do is perfect the driver, and then there's opportunities that they can have that can spring out from that. One of those opportunities is related to selling cars to consumers, which they probably work with some OEM to put it together, but somehow Waymo powered car, which was something that was new to me. And separately, they reiterated, so that would be one option. They could go the fleet route. They mentioned that they are pleased, was the word, with their relationship with Uber. So it feels like that's probably in a good place. It's a positive for Uber, because there's always concern that that thing falls out of bed at some point. But at the most core, this is the most exciting thing going on at Google. There's 4 billion rides hailed in the US last year. So this is a big market, and they got to get the price of these vehicles down. It's estimated to be about $100,000 today. I think that has to get down to like 30,000 before I think they can really compete with what Tesla's going to be offering. So, but nonetheless, the number of weekly rides increased from 150,000 to 200,000 over the past 3 months. So things at Waymo continue to move forward nicely. On behalf of Pressure Points, bye for now.